Good morning, everybody. Chris here from Serene Education with my analysis this morning for Monday, the 27th of September 2018. Okay, in front of me is the FX Ultimate template, and it's at this time that I just sit here and pause the video just to have a squiz at the template to see if there's any opportunities of true trend correlation here on the chart. You'll notice that there's still a bit of messiness or choppiness amongst some of the pairs. It's up to you now as a trader to try and decipher which pairs are giving us the best outlook. It's still early days. I mean, the European market has just opened, so let's see how things take off. And it is a Monday morning for that matter, so things tend to be quite subdued. Having said that, what I'm going to do is I'm just going to spend a bit of time going through the four majors for any of the students who are doing the Forex Made Easy program. So without further ado, let's start with the euro against US dollar. And we'll change that to a weekly time frame. All of you know that the lines that I have on the chart over here are a reflection of my analysis I did last week. So we can clearly see that here on the euro against US dollar on the weekly time frame, you'll notice that through the start of the year, this is the start of 2018, price actually failed to make new highs or new lows consistently over 3 or 4 months, and we went into this consolidation pattern. Over a period of time, price obviously failed to muster up any more bullish sentiment, and the RSI gave us a sign of that. The RSI clearly diverging as price reattempted the same high over multiple time frames. Now that indicated that the relative strength of price each time she had tested the same level before was clearly dwindling in terms of the buying pressure. So that indicated to you and I that there was less likely to be any further highs. Therefore, we should have been looking for a potential retracement, a great retracement against the overall upside market that we saw through the latter part, well, through most of 2017, in fact. And rightly so, when we had the breakout candle over here, for example, and the RSI dipped below the 50-period moving average, you'll notice that the MACD had already gone negative in terms of the sentiment. The positive sentiment, that is, fast line below the slow line, which is a negative sign, and the histogram said drop below the midline, which is also negativity. So we could have looked towards the 50-period moving average as our initial target, and then once price had got below the 50-period moving average, then we started to look towards that all-important 200-period moving average, which has been a target in the past, both a realistic resistance level but also a support mechanism, and we saw exactly that. Price now got to this level and she's kind of been consolidated, very, very messy at that. So if we just clean the chart here and I go to that all important monthly time frame, you'll notice that the candlesticks have exhibited signs of uncertainty, increased uncertainty, apprehension at this particular point, because the candlesticks are giving us, or the candlestick creations are more on the lines of that doji spinning tops. We have the August candle gave us the signals or signs of a potential hammer. If that is clearly the case, we need to see September's candle, or October, November, December's candle giving us a bullish engulfing candle to emphasize that. Otherwise, it's just a pause candle in what's still a negative trend. And if that's still a negative trend, then we cannot see price making new highs above the August close. So in that case, what we do is we draw a line on the high of last month's candle, and therefore, as long as price is resisted by that factor, then we should be looking for continued selling to come in. Clearly, you can see that price on the weekly chart has failed to make a new low over the previous 3 weeks. She's now back in this messy consolidation. Hence the reason why, if you're looking to trade this particular pair, I'll do so with a lot of apprehension. I'd rather apply trigger alert to the high side and to the low side and say, great, you can get out of this consolidated range, then you have my full attention. Until then, rather look elsewhere. So that's exactly what I've done on this particular chart, is I've drawn a trigger line above the highest point that we've seen over the previous month, and I've drawn a line at the bottom end, or the actual body of the candle, but also the low of the wick. And I said, okay, great, first and foremost, get below this wick over here, and then you have my full attention. I might be able to take an aggressive shorting trade down into the into the 200 again. Either side, I'm not willing to trade it once, as long as she still remains within this consolidated range. So I think you guys should just keep an eye on it for the time being.